What's going on, YouTube Nation? This is Darth Dividend. If you guys are new to my channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So people have been posting on my Instagram wall as well as texting me who are dividend investors, and my uncle's a investor. He doesn't invest in dividends, but he's kind of a gunslinger buying and selling stocks. I still grill him for he bought Domino's and it was like, geez, I think it was like 20 a share. He had like 1,000 shares in them. Then he sold it. I mean, imagine how much he'd be making money right now. So still grill him about that. But he brought to my attention, as well as a few of you guys, either in text messages or friends that I know, about Westrock cutting their dividend to protect their balance sheet during the pandemic. So I do own Westrock. I will show you how many shares I own on my M1 Finance portfolio. I will tell you my decision on what I will do with Westrock, if I will buy it, hold it, or sell it. And I will just, I mean, it sucks to see that, but you know, this is a rough time with investing and dividend investing. It doesn't matter who you are or what you're investing in. I mean, Vanguard VOO's way down, the S&P's down, the Dow's down. I mean, everybody's taking a hit. My real estate stocks have taken a hit too. My rates, I'll show you on my E-Trade dividend portfolio in the future about how bad they went down. If you haven't seen my videos before, you can look at some of my previous videos on my E-Trade dividend portfolio and see how bad they took a hit. It's a big sector that took a hit. But here's another one, Westrock. So let's talk about these guys. So shares of Westrock have fell as much as 14% today after the company reported fiscal second quarter 2020 operating results. Although the products of business creates the essentials to daily life, paper packaging is necessary for food, pharmaceuticals, online retail, among end markets. Operations will encounter headwinds during the coronavirus pandemic. As a nod to that reality and uncertainties in the situation, management has instituted a range of measures intended to preserve financial flexibility and reduce debt by $1 billion through the fiscal 2021. One move in particular is dragging the stock down by double digits today. Westrock will reduce its quarterly dividend distributions from 0.465 per share to 20 cents per share. So, I mean, it sucks. I mean, I follow the Matt Ramey sheet and stuff, and his the way he invests in stocks. And we were just sending each other texts back and forth, like, oh, you know, about Westrock. And anybody who is invested in Westrock, I don't care if you have a dividend portfolio, IRA, or Roth IRA, this just sucks. So I calculated the numbers. It looks like it's a 57% decrease. I think some websites are also confirming that. So it has settled to a 13.2% loss. So basically, you know, I can't say what it is because I don't want to get in trouble. But it has altered consumer buying habits, which is expected to have a negative impact on Westrock. The effects weren't too dramatic in the 3-month period during March 2020, but stay-at-home orders went into effect the final 2 weeks of the quarter. Management's hasty moves to preserve cash should suggest investors should expect a much more pronounced impact on operations during the 3-month period ending in June 2020. In addition, slashing the quarterly dividend payout, Westrock will pay an annual incentive and company 401k contributions and common stock during the calendar 2020. The business has all decided to reduce fiscal 2020 capital investments from $1.1 billion to $950 billion. Fiscal capital investments will be reduced to a midpoint of $700 million. Westrock says their efforts are aimed at responding to a situation of uncertain duration, while also prioritizing up to $1 billion debt reduction over the next 18 months. The business doesn't have major debt maturities until March 2022. So first of all, after reading this, I like that they will pay an annual incentive in company 401k contributions and common stock. I mean, they're looking out for their employees. I think that's very noble of those guys, and very it shows a leadership sign and some, let's just say they're looking out for their own first before they're looking out for us. I think that's great as a company that, people that you have hired that are working for you, they should get first dibs on that. I'm not going to disagree with that. I actually strongly agree with that. And I think that's, that says volumes of the company. So let's look at Westrock and what they're about first, okay? Let's look at their stock history and everything. So it's gone up, gone down, then really gone down, okay? So let's figure out what these guys are about first before we start jumping in to say, oh my gosh, the worst is over, the end is over. So right when they started in 2015, they were up, then they went down, they went way up, they went down, and then they went up, and then they went down. So they took a hit. So let's look at these guys real quick. So this is per Wikipedia. The previous source was Motley Fool, great website to look into stocks and look at information. So they're an American packaging company, which was formed July 2015 after the merger of Rock10 and Mad West Avco. Westrock is the second largest American packaging company. Geez, I can't talk right now. That's what I get for drinking like coffee and pretty much burning my tongue. It says the world's largest paper and packaging companies, with the U.S. $15 billion in annual revenue and 42,000 employees in 30 countries. It's headed in Atlanta, Georgia, consolidating from offices from Norcross, Georgia, and Richmond, Virginia. So I did post a video recently about right around the Virginia area, Fundrise really targeting a distribution spot. So I'm really curious to see if these guys are, by that area that Fundrise made a purchase on. So revenue is $14.86 billion as of 2017. Let's see, there's just some of their history. They acquired multi-packaging systems. So think about it. Everybody needs packaging systems. Let's look at their financials. Compare. See how they're doing. I already know that they're down against the S&P. I mean, that's nothing new. Where's their financials? Man, I cannot type. Let's just talk about their annual report. This is on financials. This is per Westrock.com. They returned in 2019 $557 million to their stockholders through dividends and stock repurchases. They paid down $757 million in debt. That's pretty good. Okay, now I know they have a financial outlook. This kind of changes things, but this is somewhat promising. How much money? Well, I already said how much money they meant. So they invested $1.4 billion in capital expenditures in the fiscal 2019, including half a billion in strategic, 0.5 billion in strategic capital projects, which is, if I'm reading that correctly, 500 million, such as our new box plant Porto Feliz, Brazil, which we believe is the largest and most efficient box plant in Latin America. So they are getting bigger. I like the way that they're saying on their website about their plans, their anticipation. I mean, they can't promise anything, but this was what their fiscal 2020 outlook was. They said that net sales will be between 18 and 18.5 billion. And so they're looking at strategic projects in South Carolina and other places. So, you know, they are looking to expand. I mean, it's the second largest packaging company. Let's look at Westrock's dividend history. Let's look at their dividend history. We always want to see a dividend history, and you know, if it's going up or down. And I can see why Matt Ramey did put this in as a stock to look at. It is 2015 0.375 cents a share, and it's gone up, and it has gone up. So I mean, that's promising in the long run that it's going up. So that's, you know, nice that it's down right now. So once I reinvest dividends and put money in my M1 Finance portfolio, I could be buying more shares. And then once they wake up, it's like, hey, there we go. So, you know, it doesn't seem too bad with its dividend history. I'm going to jump to my M1 Finance portfolio, and I'm going to give you my final conclusion on what I'm going to do. Let me just show you, I threw in $40, and I'll just show you what I put in my dividend stock portfolio. So I got Bank of America today, Seagate, Invesco, sphd, Boeing, 3M, Maximum Integrated Products, and Delta Airlines. So I got some buys right there. But anyways, let's go to my portfolio and how many shares I own. So Westrock, how much do I have in these guys? I have 6.45 shares in my total position. Obviously, it's down. You know, it's gone. It's dropped to basically I'm not sure if it was 75%, but I read 57. I mean, calculating stuff is 50%. I'm going to have to look into that. Look at that article again. But I got 6.45 shares, and you know, they've been down. Everybody's been down a little bit. But if you look at the Matt Ramey effect, or I'll just call it the Matt Ramey effect. I don't, Matt Ramey theory, I still haven't figured out a thing to call this graph. But looking at this, you know, it is the value, it's going to fix itself over time. I mean, it makes perfect sense why they took a beating recently. And, you know, they're the second largest packaging company, and they're only $24 a share. And I know it's went down, but I'm going to give you my honest opinion. I'm going to keep these guys in my portfolio, and I'm going to potentially try to buy more shares. I'm probably change the percentage a little bit because I do need to keep that wheel spinning on M1 Finance. Let's go back to my portfolio. So how many shares I have? So I have 7 shares of Innovative Industrial Properties, 13.5 of Pfizer, Coca-Cola, 10.6, AT&T. By the way, next week I will, I have a special video with a collaboration video with someone, and it involves Coca-Cola. So make sure that you check it out. It's going to be entertaining, and it's going to be full of information about stocks. So, you know, that should be posted by 5/16. And the person that I'm collaborating with, I will post his YouTube link and his one video that he made in the comment section, or I'm sorry, in the comment section. And we're going to agree to disagree, but this is a big rivalry between Coke and you know who that is, Pepsi. So we're going to have a big debate on that, on who's the better stock, and you know, who's going to be, you know, who's the victor, and why, you know, one stock's better than the other. So that's going to be a really good debate. We're going to have a debate video against each other. So you have Ohio State, Michigan, you have Coca-Cola versus Pepsi, and then you have the Jedi versus Sith. So this is going to be a really fun video and debate. It's going to be a collaboration video. I'm going to post my video. He's going to post his video. And then we'll probably have a poll at the end on which one you think is better and which stock is better. So this will be fun. This will be a great discussion. I can help promote his channel too. He's a very sharp dude, and I enjoy chatting with him on Instagram as well as watching some of his YouTube videos. So stay put on that one. But AT&T, ExxonMobil, yeah, I know. They froze their dividend. That sucks. BIP, Unilever, Iron Mountain. I still feel very good about Iron Mountain. I may even post a video about them, why I think that they could be a strong company in the long run and why I'm going to hold on to them. Discover Financial Services. I have a small amount of shares in them. Fastenal, Royal Caribbean. So I have some stocks that I really like on here, and there's a lot of potential with these. So I need to. I'm definitely going to hold on to that. I just see a lot of potential with those stocks, and once my percentage or allocation percentage gets back to where I want it, because I have a certain percentage in some of these stocks that are really down, and I'm capitalizing it. Like one of them is Discover Financial Services, and another one is Royal Caribbean, as well as Delta. Delta's way down. So these are some really good stocks that I see rebounding pretty strong. Again, I'm not a financial advisor, but there's a lot of potential with some of these stocks. So I'm definitely going to hold on to it. I think Westrock has a lot of potential, a strong future, and let me just read this article. I saw this. I'm like, what the hell? I thought it was 57%. Did they? But they're down. But there's a lot of things that I just see a lot of potential. So I don't know if they change this or something by their calculation, but last I read was 57% decrease, but could be wrong. They could have changed something. I didn't see something, but I'm still going to hold on to these guys as a stock. And maybe Motley Fool got me in a clickbait, but I see a lot of potential in the long run. The American machine's very strong. The infrastructure is very strong, and I just don't see these guys going. I don't see these guys going down. I just see them going up. So that's my honest opinion. And let me know what you think. Make sure you subscribe and hit the notification bell so you don't miss future videos. Are you going to buy? Are you going to sell Westrock? Are you going to hold? What are you going to do? So let me know what your honest opinion is and go from there. Thank you again for watching this. I'm waiting on my response from Fundrise and an email, because I will be posting a video on Friday or right around Friday on my Fundrise Friday discussing the question that I asked them. So if you are new or you're a Fundrise fan, just stay put and go from there. But this is Darth Dividend, and again, happy Nurses Week to all the nurses out there. I'm a registered nurse. I am very proud of being a nurse. I would not be here doing videos today if it wasn't becoming a nurse, because my confidence has skyrocketed. I expanded to learn. I pushed myself to, learn new things every time, and learn new things, which included investing. So, if it wasn't for me becoming a nurse, I don't think I would be here doing these videos. So take care and have a good one.